Thank you, everybody, for joining us today. I am honored to be sitting down with Brad Yasar, the CEO and founder of Beyond Enterprises. Thank you so much for joining us, Brad.
Thank you for having me.
So, I wanted to kind of start here with your background, which is before technology and crypto, I think, economics based. So, could you speak to economics in your view? Perhaps also just give a brief primer for people who don't know how economics work, how you believe they work.
I studied economics. So as an econ major, there are different systems that you can construct, and they work in different ways. Obviously, the system that we're most familiar with is capitalism, which is prevalent in most parts of the world to a certain extent. Obviously, when you're talking about economic systems, they get affected by political systems that govern those economies. So you get different flavors of capitalism in different parts of the world. If you have an autocratic government, it changes and becomes more of a monopolistic model. If you have a democracy, it's supposed to benefit everyone because of the competition, which doesn't always happen. So it just depends, what over uh, underlying political system governs the economy of a given country or region. But economics is basically study of movement of value, movement of money, if we want to simplify it. So if you look at what you learn by studying economic models or systems or theories, at the end of the day, you learn about human behavior and how value is transferred from one entity to others, and what the consequences of these activities are.
What do people misunderstand most about capitalism?
I think capitalism in and itself is 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 optimizing for value. So, there's supply, there's demand. If there's more supply of something, its value drops because it's widely available. If there's a smaller, reduced supply, the value goes up because there's more demand than what's being supplied. Now, in application, again, us humans have a way to corrupt even the simplest system. So it doesn't work like that. I think the misunderstanding of capitalism is you have to be selfish, and you have to be self-serving, and you have to maximize what you get out of every deal. Some people see it that way, and so the application of a theory that in theory is a decent model and could benefit the people and the markets that it affects, turns into this one-sided uh, you know structure where there is a few people benefiting at the expense of a larger community. And I think that's just the application that's not being done the right way. It's not the theory itself or the model that's wrong or faulty in some way. I mean, are there better economic models that we can discuss other than capitalism? Of course, but even the application of those better models could be corrupted, and that's the challenge we face.
Can you give some examples of what models you think might prove better?
Well, so if you have a monopolistic, centralized financial model which governs all countries right now, you have a government that controls a territory, and imposes its will and laws and regulations on the people living in that territory. And then in return, they promise, protection, prosperity, what have you. Now, the only source of wealth creation lies in the government because they are the first beneficiaries of any value created. And I'm talking on money here or debt. When a dollar is printed, who gets that value as soon as that bill is printed? It's not you, it's not me, it's the US government because they print, let's say, $10 billion. They spend those $10 billion. So they created $10 billion worth of value that they were able to spend. Same with debt and bank loans and things like that. But let's keep it simple and stick to money. Now, who's the secondary beneficiary? It's the banks that receive that first release of the newly created value. So the second-hand value comes to the banks, and now they're allowed to either spend it or loan it out or invest it in projects. And you see the trickle down. By the time it gets to someone like you and I, who may be working at a company and getting a salary, it already, the value was used by 4, 5, 6 different entities before it comes, that $1 comes to you. So with that model, it always originates from a central authority, and we don't have individual rights to create value the same way a central bank or a government can. Now, if you look at what's happening with blockchain, decentralized finance, and cryptocurrencies, that's changing because now a company, even a startup, can say, hey, this is my vision as outlined in my white paper. This is what I'm going to do. And this is going to be the currency I use, whether they create their own token or start using an already existing decentralized token or coin. It doesn't matter. It's not originating from a government. So now you can have a startup like Ethereum Foundation, which started 6 years ago, 5, 6 years ago, and now they created about 17, 18 billion dollars of value, but it wasn't created by a government entity. It was just created by a foundation that said, hey, we're going to create this ecosystem. If you want to be a part of it, you're going to use ETH. You're going to use Ethereum. And the people who wanted to be a part of it or believed in the project took part in it. And now they can transact in Ethereum. Same as Bitcoin. When Bitcoin was launched, obviously it was experimental and academic, but a few years later, it started having real world value to it, even if it's a few cents or a few dollars. And, fast forward to today, everyone has seen the meteoric rise of Bitcoin because there are enough people believing in the value store and transfer properties of Bitcoin to use it. And it didn't originate from a government. It didn't even originate from a commercial entity, a business. It was just created by an anonymous network of people and grew into what it is now. So the economic shift of going from a central authority controlling all wealth creation to anyone and everyone in their own small ways being able to do it is, I think, both a more sustainable and beneficial model, and it democratizes access to capital and access to opportunity and access to economic activity for a lot of disenfranchised groups. Because I'm in United States, I have access to banking, I have access to a judicial legal structure that protects its citizens, and all these things we take for granted here do not exist in some countries. So there are countries where having access to a cryptocurrency that's not controlled by the government is the difference between life and death. I mean, you can look at Venezuela, you can look at, Argentina, you can look at a lot of the um, South American countries with hyperinflation, and because of the decisions and the actions of their governments, the people are suffering, and they don't have the protections, the luxuries, the access we have in the Western world. So when they're given an opportunity to use Ethereum or Bitcoin or any other crypto, suddenly their life standards change drastically, and they can go back to having a normal life as opposed to worrying about spending the money, the cash they have in their pocket immediately, because 5 minutes later it's going to be devalued 5%, 10%. The next day, it may not even buy them a loaf of bread, but that's all they have.
There's a certain line of reasoning in the historiography of Bitcoin, which posits that it was a product of an Austrian economics based way of thinking, which I think is based in free market philosophy and ultimately capitalistic philosophy. I'm curious, do you believe that Bitcoin, and I guess hence much of the cryptocurrency ecosystem, was inspired by Austrian economics and or capitalism? And if not, or if so, why and how?
That's a really good question. Actually, to be honest with you, I don't know. Are there traces of economic modeling in Bitcoin that obviously that are based in past uh, economic theories and uh, financial models and what was being discussed in Europe. Absolutely, yes. So if you want to correlate, you can say, well, this much of the economic governance in Bitcoin is actually based on this model. But then you look at the evolution and you look at how it's growing and what it's doing right now, and again, obviously the founders didn't get it right the first time. That's why Bitcoin forked more times than people know about, because it didn't always yield a secondary chain that was also living on its own. But if you look at the improvements or tweaks or changes, I think the biggest um, innovation of Bitcoin was not what model it was derived from or inspired by, and how it shaped what it did initially and it does now. It's more giving the community the control, the community of people who support Bitcoin. So in uh, tech parlance, that would be the miners, the node operators. So giving them an opportunity to choose how they move forward, I think that's the biggest innovation. Not the initial model, but how it can evolve without any government participation, without any world organization input, without any uh, restriction or control of any specific um, economic force. If enough miners want to shut down Bitcoin, they will shut down Bitcoin, because they will stop mining it and it'll slowly wither and die, which could have happened. I mean, it was a binary outcome. It was either going to survive or people are not going to really understand or be interested in it. And then it doesn't. I mean, there are a bunch of ghost chains where there's very little economic activity because the founders were not able to convince enough people that what they created, should propagate and grow and hold value. Bitcoin is the exact opposite. It grew to a level that very few imagined, including the early adopters and founders of it. But it's because it's community driven, and the community that holds it and supports it can make a decision to change things. You want to change the block height, you introduce a proposal. If enough nodes and miners accept it, The new Bitcoin chain will have a different block height. You want to introduce new economics, a different model, you will propose it. If enough of the participants accept it, it's incorporated. And that's the beauty of Bitcoin. It's not it's governance by stakeholders, and I think it's worked phenomenally so far. Even with the forks, even with the dissenters who created their own change, which is again a great economic opportunity to say, look, I don't agree with what Bitcoin is doing. I wanted to do this. Who is with me? And then you have that split happen. And if enough people support it, now you have a different chain, like Bitcoin Cash, you know, SV, you name it. There are forks of Bitcoin that are obviously not at the same adoption level or size, but still very viable, vibrant communities because enough people agreed with that change to create that. Does that make sense?
Yeah, I'm curious as an economist, what are some of the most interesting blockchain based models or cryptocurrency game theory that you have seen?
Ooh, I'm not prepared for these questions.
For for one, like when I look at like DeFi, I think there's a lot of interesting ideas that are being thrown around. I think that at the current juncture, there's a lot of risk. I think also that we haven't fully figured out a decentralized infrastructure for many of these projects. So I hesitate to call them all decentralized. A lot of it's really centralized finance, but I'm curious, just what are your general thoughts?
Cool. I mean, generally speaking, and looking at things, not naming specific projects and doing a deep dive into them, because again, I would want to do some homework before talking about someone's project intelligently. I think the most exciting models are models that are truly eliminating the middleman. I mean, when blockchain came to be and early years of blockchain that led to the ICO boom in 2017, there was always this premise and promise and talk about eliminating the middleman because most of the economic activity in the world is captured by the middleman. It's not the end user or the producer, it's the people who get those two together. So with a decentralized model, of course, everyone was talking about, oh, we're going to eliminate the middleman in logistics, in advertising, in this, in that. And I think since you mentioned DeFi, with DeFi, we're starting to see some of those come to life and in a very successful way. So let's look at simple liquidity pools. Up until 2 years ago, well, three if you consider Bancor's launch as one of the pivotal points. But up until a few years ago, if you wanted to exchange even a crypto asset, you had to go to a centralized exchange, deposit your asset, and then get whatever asset you want in return, fiat or other crypto. And that was just like you said, it was a decentralized system that was using a centralized model to accomplish a trade. Now we're seeing some very interesting ways where new liquidity pools are created and people can both benefit from being able to exchange freely their crypto assets back and forth without any third party, even not a centralized crypto exchange intervention. They just plug their wallets in, um, trade with whatever counterparty they want, and that's the end of it. And it's completely anonymous. It's decentralized. Like if I sell 5 Bitcoin to you, I don't know it's you and you don't know it's me who's selling it. It's just like I'm getting Ether and you're getting Bitcoin, or I'm getting USDT and you're getting the Bitcoin. And I think that's very revolutionary because you're basically eliminating not only the government factor in all those trades that old governments try to control and tax and track, but also the middleman, that's the exchanges, the banks, the people who insert themselves in the middle of the transaction to get a piece of it. Now, I'm not saying decentralized exchanges are free, so I don't want anyone to think, oh, well, what about the fees I pay there? Of course, for any system to work, there has to be some fuel for it. And there are fees that fuel Uniswap, there are fees that fuel SushiSwap, and all those decentralized liquidity pools in exchanges. But it's still not a person. You're not going to a bank and saying, hey, can I buy some euros with my US dollars? And then the bank decides what the spread is, like what how much you can exchange, because there are limitations in what you can do with that money. They tell you, okay, you can do this, but not that. So I think that's revolutionary to see that what we've been talking about for 5 years, 6 years now, eliminating the middleman, is happening in decentralized finance. We can look at different products, different yield mechanisms and swap mechanisms, and things that are only accessible and visible to uh, people with a lot of money, or entities with a lot of money right now in the traditional finance, because a regular person, working their job, don't really, they don't really think about swaps and futures and things like that. I think what decentralized finance projects are doing is they're also bringing it to the individual level. Now you don't have to be an institutional investor or an analyst at a hedge fund to have access to, or to learn about these things. You can go to any DeFi project. If you have a little bit of crypto, read what they're doing, proposing, then do some research to see how it's used in outside of crypto, in real life, let's call it, in traditional markets, and then apply it to the small amount of investment or savings you have, which ties really good into the other really revolutionary change that's happening, and that's um, access of small investors, retail investors, to really interesting and complex financial products. Again, when you have a network in the millions, you had access to all these products in the traditional financial uh, environments too. But if you had a couple thousand, no one really, gave you an opportunity to provide liquidity or a loan, or go on yield farming pools or anything like that. Well, with DeFi, because there is no very minimal human interference in the process and no middleman technically, it's brought all those complex systems down to the retail investor level, where they can learn and benefit from it too. Now, does it have its drawbacks? Yes, because there are a lot of complex investment options now that are popping up in DeFi. And even if we set aside the ones that are outright scams and people trying to take advantage of each other, even with the good products, you see a lot of people get frustrated and potentially lose their investments, because now they have access to such complex products that they don't fully understand, and they don't want to do the homework, invest some time in understanding. They just go into a project and they get frustrated, and it doesn't work for them because they didn't understand the economics, the model. And so there are challenges that come with democratizing every financial product and every potential complex structure and model to everyone. But if you ask me, I'd rather be able to access something and not use it because I don't know what it is or it doesn't apply to me, than not have access to it because my net worth is not enough, or because I'm not a part of the right company or fund, or something like that.
When analyzing the cryptocurrency ecosystem, what are some of your favorite economic indicators you like to look at, whether that be at the health of a particular cryptocurrency or when analyzing a project for fundraising purposes or otherwise?
Um, so I've been an investor for over a decade. Probably it's going to be too soon, but I look at mostly the people in projects. If I'm analyzing a project, if I'm preparing to do due diligence for an investment, what I want to see is some differentiator in the skill set and experience of the people, because great ideas are dime a dozen. We all get that $1 billion idea. The reason why we're not all billionaires is because we don't know how to execute on it and get it to a point where it's worth $1 billion. So I always try to um, look at the team and their background and skill set and how complementary that is. Now, in instances where that's not easily visible and accessible, I try to I try to look at the project and look at the stakeholders. Again, as with anything else in life, if enough people support you in your mission, vision, and goals, you're going to be successful because they're going to help you to get to the next stage, to the next stage, to the next stage. So in crypto communities, online communities often make or break a project. If enough people support it, become successful, there's momentum, then momentum begets more momentum, and it's really exciting. If people don't understand or don't like it, or even worse, don't know about it, then you run into really good, really brilliant economic models, tokenomic models, groundbreaking technologies just withering and dying because literally they don't have the support because no one knows about it. So for me, the team, the community, and then of course, if it's already on an exchange and trading, you can look at some technical analysis just to get a sentiment. Again, I don't look at technical analysis in absolute terms, but more what are other people thinking about this asset? And then some fundamental analysis. What is the underlying premise of the company or the asset? Like if you look at Bitcoin right now, why is it increasing? Why is it valuable? It's it's not that difficult to understand because there's more demand than people willing to sell it. That's the price increase. But also, it's proven in the past 12 years its role as a value conservation. You can value store. You can store value in Bitcoin and be relatively confident that minus all the violent market fluctuations and such, it's going to be there in 3 to 4 years. Like Bitcoin moves in 3 4 year cycles, more like three. So if you can hold it for 4 to 5 years, you're always gonna, at least so far historically, you always had more value in it than where you started. So if you understand the mechanics and the value prop, it becomes really simple. If we look at, I don't know, Uniswap, what's the value of Uniswap? The ability to create any trading pair and provide liquidity for it for some fees. So, if you analyze the token that governs Uniswap, the Uniswap token, you can see that as more value is locked in the pools on the platform, the value of that goes up because of the tokenomic model that they have built in. And so I think it's always, for me, starting with the team, then the community, and then going into, okay, who's going to use this? Is this like valuable outside of the hype, outside of the emotions, outside of my preferences or feelings about it? Some projects you get really excited about, others you're like, oh, I don't even know what this is. It doesn't appeal to me. But if you want to draw an economic benefit from it, you need to strip those and look at it with an objective mind.
Do you have any comments on the state of venture capitalism in the greater context of technology, and then, of course, as it applies to the cryptocurrency industry? I think that historically, starting a business often entailed doing turning a profit at first, then building from there. And today we see a model where perhaps there's grander, more costly ideas that are proposed, and then funds are raised in the pursuit of that idea. Do you have any comments on, I guess, the evolution of doing business in the wider context of capitalism and also blockchain and cryptocurrency?
I think they're intertwined, those answers, because I think the as more blockchain is opened up. I mean, people understand more about different blockchains and different ways they can use them. I think it's allowing them to break into some areas of venture capitalism that were just very geocentric and even to a point clicky, for the lack of a better term. So what I'm trying to say is venture capital uh, started in obviously in United States, led to incredible technological advances in economic growth, especially on the coastal cities in California, in Washington, in New York, and so it's still highly concentrated. To just give you an illustration, an average angel investment in the U.S. in a startup is somewhere between $10,000 and $25,000. So to be an angel investor, those are the amounts expected. If you look at Africa as an up and coming, uh, global workforce and economic force and part of the world, the average angel investment is $500. So it's possible to take $500 from a couple dozen people and start a company, a business. Whereas in Silicon Valley, if you got 25 from 10, 12 investors, you wouldn't even be able to hire two people because you're just not going to have enough money for the 6 to 12 months contracts that they're going to ask. So I think venture capital is changing from the old monolithic model where there were successful funds and mid-tier funds, and then the others disappeared eventually because their LPs were not happy. And then those successful funds grew bigger and bigger and bigger, and they kind of focused on their geographical area just because it's much easier to invest in a company governed by your country's laws than go to another country and invest there and you don't even understand the regulations there or the protections you may or may not have. It's so costly to have cross-border international lawsuits that most of the time an angel investment is not going to be worth the cost, the legal cost to recoup, even if you're wrong. So venture investment, angel investment had always been geographically concentrated in certain parts of the world, maybe Europe, maybe West Coast, East Coast, a few places, Hong Kong and Singapore in Asia. And so now with blockchain and crypto, we're seeing proliferation of that. Again, why? Because now a crypto project can raise from, of course, venture capitalists, big funds, if they have any interest in what they're building, but also go to their community and say, hey, if you guys, all 10,000 of you give me $100, I'm going to have $1 million to build this amazing solution. And because it's decentralized and global, you can use it anywhere. So I'm not building this product for California. I'm not building it for, UK. I'm not building it for Singapore. I'm building it for global use. So anyone anywhere in the world, obviously, minus the regulations and restrictions that govern some of crypto, but pretty much anyone can access this DeFi product or this advertising product and use it and draw benefits from it, and I would benefit in return for having that value brought into to the network. So I think it's becoming more and more uh, uh, proliferated, and with crypto and blockchain and distributed ledger technologies, people are realizing that you don't have to be in Silicon Valley anymore to raise a successful venture round. You don't have to be in Los Angeles. You don't have to be anywhere. As long as your project has the fundamental appeal to those people, they're going to come find you, and you could be a startup in Vietnam, and they're going to go and maybe open an office there and invest in you because they see the potential. And I think that's wonderful that capital access globally has increased as a result of blockchain and crypto. And also, hopefully, we're going to see more and more meaningful and reasonable legislation around it, so that we can have a global framework around how to use the blockchain, how to use crypto assets, and how to benefit from all these up and coming financial products without being in doubts about where your government stands on the issue, or are you breaking the law, and things like that.
When doing due diligence, what do you look for in a entrepreneur or crypto entrepreneur?
Um, it's not really a set list of qualities or points that they need to hit. It depends on the project. So if let's say if the project is in DeFi and it's a founding team of 4 or 5 people, I would look for at least one person who understands finance and economics. If there's no one on the team who's remotely experienced in that area, they can be the best programmers, but probably there are going to be challenges down the road. Can they overcome those challenges? Can they hire a PhD in economics, and overcome that? Oh, absolutely. Once you have enough money and enough of economic activity with your project, you can do whatever you want. But the initial success of the seed team depends on the experiences and characteristics of the founding team. So I would look at, okay, who on this team is going to properly um, structure the tokenomics? Who on this team is going to properly do the economics for growth of this project? And if there's no one, of course, that's a red flag. And then, in crypto and blockchain, of course, you want to have one or two technologists that understand the underlying technology. So if they're using Ethereum, who's going to do the programming? Are they outsourcing it? Then who's the third party? And then who's going to do the audits? And how meaningful are those audits? Are they like from a reliable source done properly, or is it just someone putting a stamp of approval because they got paid to put the stamp of approval? So it just depends on how complex the technology being built is, and what types of skill set are going to be instrumental in doing it right. Like for a project that's doing marketing on the blockchain, it would be a complete different skill set. Like, who's the marketer? How are they approaching it? Who's growing the community and doing the communications? So I just look at different things for different projects, and I'm not saying I always look at the right things or catch the wrong things that may happen, but at least as a starting point, having that flexibility helps me find some gems that other people pass on. Because there are a lot of funds and active investors with a set list of questions that they go in, and if you don't, get every single one of them right, they're like, oh, this is not for me. I try not to do that because I don't want to lose on the opportunities. So for me, it's more like, okay, let me look at where where we have uh, some opportunities because the experience is aligned and expertise is aligned. Obviously, if they're repeat entrepreneurs, that's always good. Like I look at what they did in their past company. It doesn't have to be blockchain. Did they, have a successful exit? What that looked like? Were they fair to their investors? Did they care about their investors, or was it an exit that only benefited them and the investors got screwed out of millions of dollars? Obviously, track record is really important, regardless of the project and the industry. And then, is it a balanced team? That's really important too. If you have three founders and they're all programmers, probably not the best comp of founding team. If you have three marketers founding a crypto project, it may be really good vaporware and pump and dump, but it's not going to really yield a long-term business model because they don't know how to build things, and it's very difficult to build technology that lasts and that's scalable and maintain it to scale. So team composition, how balanced it is, and do they cover all the areas they need to have a successful project, and the experience background based on what they're trying to do. Again, if someone has been a successful restaurateur and they cook amazing food and they want to do something using the blockchain with food, that's great. They don't have to have the technology background because they understand the industry they're bringing the technology into. But if they're an executive chef and they want to do DeFi product, I would question that more. It's not like a hard pass, but I would think, okay, well, why is this like? I always ask, why you? Why should you be the person running this operation, bringing this project to life, and doing it successfully?
What does your background in economics inform you about tokenomics? What do you think about tokenomics in general?
I can summarize all my years of economic studies in one sentence that one of my undergraduate teachers, professors told me. He said, look, we're going to learn a lot of theory, a lot of complex models, but at the end of the day, follow the money and you'll understand why something is happening, whether it's some price movement or political movement. So follow the money really stuck with me as a simple rule of thumb. Like I take that into tokenomics, and when I see, token models and distribution models and allocation models, I look at who's going to benefit from it, how is this going to grow, and at the end of the day, are there enough parties that are not the founders that are going to be positively impacted by this project uh, to make it a success? Because if the answer is yes, that's great. It's going to be a successful project. If the answer is not a clear yes, then I want to see what the potential pitfalls are, what I can do if I decide to get involved with the project, what can I do on my end to address those, and how, if possible, can they be avoided, right? Before even it happens, how can we avoid this? Because it's really simple. You see some tokenomics models, you don't have to do really complex analysis and get technical analysis dropped on it in mathematical analysis or anything like that. You just look at it and you're like, wow, the founders are going to just be the beneficiaries of this project for the next 20 years and no one else. So why would this project grow? Why should anyone else care about it? Well, they won't, and they don't. So that's where it's important to look at the model and look at a long-term outcome of who's going to benefit from this. It's really simple. Most of the times when I'm right or wrong about a project, it's not out of deep financial modeling in analysis. It's more a gut feeling of talking to the founders or doing research on the project and then looking at, hey, let me follow the money. Can I follow the money? In some instances, you can't even do that. You don't know where the value is being captured. And it's like, okay, if I can figure it out, probably there's going to be other people who can't figure it out. And if that happens, then this project is going to have issues and not grow. Really simple.
Do you have any concluding comments on tokenomics?
Yeah, I mean, tokenomics are probably one of the most challenging exercises you can do because if you can have a couple options when you start a new crypto project. You can have a company that's attached to it. Then you have shareholders in that company, whether that's just the founders or founders plus investors. So you need to capture some economic activity for those people who are on your cap table. Then you overlay a token model on top of it in tokenomics, and now it's double complicated because in a traditional business, it's expected that as economic activity grows and your business is successful, that success and value creation is captured by shareholders because they hold a share or shares of your company. With a company that has also tokens, now you have two groups of stakeholders. You have your shareholders and you have your token holders. So you need to think about both groups and have a value capture mechanism that rewards both. It doesn't have to be equally, but at least in a fair manner. The other one is, of course, the foundation nonprofit model where you don't have shareholders on the company side and you just have token holders. Now tokenomics becomes a little more simplified and similar to a traditional business where you try to capture all the economic activity and value created in your tokens. But even that in and itself, and then there's the third model where there's nothing behind the project, and it's like just on the ether, we're issuing tokens, and then again the challenge is where the value is captured and how do you have accountability. Like when I see these ghost anonymous DeFi projects pop up, it always shocks me that people actually put money in them because you don't even know who's behind it, if it's good, if it's bad, if there's even a proper value creation mechanism, or if it's just a scam, a pyramid scheme, a rug pull. You don't know, and people are still putting money in those instances because they're too lazy to do some research and or stop for 5 minutes and think about the consequences of the project not working out. But tokenomics, I think, need to be designed and have to be modeled based on what you want from your project. Like, do you want high velocity so that you can grow really fast, but it's going to have a lot of fluctuations once something is in the secondary market, whether by your doing or on its own, it's really hard to control those prices. So a lot of the times, even very solid tokenomics models have a hard time predicting what's going to happen once the token is listed somewhere. And it used to be with obviously the centralized exchanges that you had to apply to get your token listed or coin listed. And, there was a process and you kind of controlled it. These days, anyone can create a liquidity pool with your token as long as they own the token and price it however they want. So it's becoming more and more challenging to do uh, good tokenomics modeling, and it's a great challenge whenever I'm asked to help out with the economic modeling of the project and tokenomics. I actually get excited because I know there's no one easy model, easy solution, one size fits all kind of template that I can give, and that's it. It's more like, okay, if we align incentives this way, how do we deal with it if it goes this way? And it becomes a really, interesting problem to solve.
Can you tell us what Beyond Enterprises is up to these days?
Well, Beyond Enterprises has been doing a lot of incubation lately. We started more as a service provider and advisory firm, providing, advisory services as well as development and marketing and everything in between to see projects go from seed to market share. And in the past year or two, with the crypto going into a winter hibernation mode, as it was called, with the crypto winter, we realized that there were some ideas that either people brought to us or that we had ourselves that are worth pursuing. So we started working on those. And these days, our workload is pretty much half and half. Half of the projects we incubated, they're internal projects. We self-fund them, bring them to the market, and hope that the excitement we feel over them is echoed by the communities we share it with. And then the other half is really good projects that want to work with us because they see the value in capturing the experience and expertise that's in this field. And so we've been, steadily working on building stuff and bringing those projects to life this year. I mean, last year has been a building year. 2019 was a year where a lot of these projects started kickstarted, and we started doing the planning and strategy and some of the initial build out. So I think as far as Beyond Enterprises goes, we're in a really good place to have a few launches this year and see how how they go, because the crypto markets have picked up. The market cap is over $1 trillion now, and there's a renewed faith and interest in people delivering on their promises and bringing some really valuable both infrastructure and DeFi projects to life. And yeah, we want to be a part of that wave.
Any comments in closing, Brad?
No comments. I mean, it's a good time to be alive. I've seen several cycles in crypto, starting with Bitcoin, starting with the first halving, price crashes, and I've always tried to have a very long-term vision and strategy around my involvement with the space, and I'm excited to see more institutional players coming in, more retail people showing interest in crypto and adding it to their portfolios or holdings, because all that activity translates into better projects, right? If you have uh, big players in the market and they're looking at projects, it becomes more respectable, and more serious people get involved with it. And this is very early still. It's been a decade, but I still feel like this is the very early days of crypto. And once it passes these infancy stages, it's gonna hopefully have a big positive impact on a lot of lives. And I want to be a part of that change. I want to work on projects that bring more prosperity to people, give them more access, and empower them to do everything that we're able to do because uh, you know we're in countries and the economic environments that support that.
Brad Yasar, thank you so much for joining us today. Of course, you are the CEO and founder of Beyond Enterprises with a Z, Enterprises with a Z instead of two S's at the end. So that's Enterprizes, correct?
That's correct.
Where can people find you?
I think the best way to reach me is through the website, and some of my social credentials are also on there and out there. So if you you know search for me, you can find me on LinkedIn and most of the social networking sites as well as the website. But website would be a direct line to reach out if it's a professional inquiry.
Thank you so much, Brad, for joining us, and thank you everyone for listening.
Thank you for having me.